Welcome back to WWTA News. One more article to keep the trend moving. Very funny, I would say, just looking at it. But we're going to jump right in and just get to it. UBS agrees to buy Credit Suisse for 3.2 billion. UBS has struck a deal to purchase troubled Credit Suisse for 3.2 billion as bank solvency fears continue to batter global markets. Why it matters? Aggressive central bank action to arrest stubborn inflation has shaken investors' confidence, with financial institutions caught in the crosshairs. That is so interesting. Central banks, right? These financial institutions, as they're dealing with inflation from the money constantly being printed, businesses, corporations aren't able to get these debts paid for, meeting these maturity dates and getting this stuff paid for, and so the price of things are going up. We're failing, right? Pretty interesting, right? Aggressive central bank action, right? So there, what did we just learn from the past article? Right? Hey man, get a loan from the Fed to your central bank. Then you take your money that you got from us, right? And then you go over there and you make your banks there liquid by doing loans with them, and you get their contracts, their debt loans, and you take them up under your wing, and then you can do what you gotta do, and then they gotta worry about paying you back, right? Well, look, right? The details. Under the terms of the all-share transaction, Credit Suisse shareholders will receive one UBS share for every 22.48 Credit Suisse shares, for a total consideration of 3 billion Swiss francs, 3.2 billion. The deal is expected to be finalized by the year's end. So, if you're holding these stocks, what they're basically saying is, we're going to after the buyout, you're going to be getting UBS shares, right, for the failed, right, that we had to consume Credit Suisse. This is what you're going to get, right? So it's not even a bailout. That's crazy. It's really like, in a sense, you failed, I consumed, right? I'm going to swallow you up. I'm going to make all that mine. It's like a takeover for real, but it's like there's got to be more behind it. You know what I'm saying? It's got to be more behind it. Anyways, after years of mismanagement and scandal-ridden headlines, the storied 167-year-old European banking giant was laid low by a crisis rattling the banking sector in the wake of Silicon Valley's bank failure. Credit Suisse, one of a handful of global financial institutions deemed systematically important, posted a fourth quarter loss of over $1 billion. Right? So they lost in the fourth quarter $1 billion. Over the last few days, it has suffered mass outflows as problems mounted and bank sector concerns festered, pushing its stock to record lows. So people are looking at, not people, common people, businesses, institutions, and everybody else that holds shares, because, again, the asset is where people are trying to keep value of their money, because they can't just keep money, obviously, in a bank, because what happens, right? Stuff like this. So their assets are allocated to stuff like shares, right? And so their whole businesses, corporations, institutions, everybody, they're holding shares of these companies and so on and so forth. So they're watching the record losses, right? So as we've came out of the crisis. Inflation's continuing to go up. Countries aren't having those debts paid back fast enough. They can't keep raising their debt ceiling, right? So as all these things are going on, and people are looking at things around them and watching the big news titles of what's going on, fear sets in, and then people start pulling out, selling off their shares. And if they sell off their shares, well, that's the investment, in a sense, that the bank holds. So then, okay, now there's a trade-off. So now the banks still have their problem or their issue with paying off their contracts. You see what I'm saying? So because this is a debt-based society, it can fail from people or businesses just in fear. You see what I'm saying? It's not a equation. It's not a you know what I'm saying? It's not like an algorithm that does this. This is people. And people can move based on fear and information that's shared around, obviously, and those can cause problems, right? So that that puts us in the situation we're in, just the way the system is. So it's literally just the system that can cause the failure, that has caused the failure. It's just this system. So that's why a new system has to be set in play, and that's why you can't stop it from coming. That's why they're working on it, and that's why you're going to see it all the time. You're seeing it now, but you're going to start seeing it all the time, because this is what's necessary to fix the broken system. That's what I got. You got any thoughts and ideas? Share them in the comment section below. Other than that, I'll catch you all in the next episode.